Every empire in history believed it had found the secret to endless wealth. But behind every monument, every boom, and every golden age, there was debt, invisible, unacknowledged, and yet essential. Today, the illusion has grown so vast that we've stopped seeing it. Debt isn't just a burden anymore, it's the lifeblood of the global economy. The first debt wasn't created by banks, it was written on clay. Thousands of years ago in Mesopotamia, people borrowed grain, cattle, and silver, recorded on tablets that marked the beginning of financial civilization. Debt was born before money, as a promise, as trust, as obligation. The Roman Empire's prosperity was built on debt too, but its victims were citizens. Roman elites lent money to the poor, who pledged their freedom as collateral. Debt slavery became so widespread that entire revolts erupted not against invaders, but creditors. In medieval Europe, the church called interest sinful usury, a violation of divine order. Yet behind church walls, kings quietly borrowed to finance wars. Debt had become too powerful to resist a sin turned to necessity. The 1600s changed everything. With the rise of Amsterdam and London, credit became a national tool. The Dutch created bond markets. The English learned to fund wars through loans. It wasn't gold that built empires, it was paper. The first great financial illusion of the modern world, the South Sea Bubble. Investors believed they were buying into trade wealth. In truth, they were buying government debt wrapped in fantasy. When the illusion burst, thousands were ruined, and yet the idea survived. Debt could create wealth, if packaged just right. By the 19th century, nations discovered financial alchemy. Debt was no longer evil, it was transformation. Governments issued bonds, banks multiplied credit, and the economy expanded not on gold, but on promises. The United States would take this idea further than any nation before it. From the Revolutionary War to the New Deal, America learned that debt could drive innovation, build infrastructure, and buy time. Debt was no longer an emergency, it was policy. What began as survival, borrowing in crisis, became a strategy. Governments realized that debt could sustain growth even in peace. Economists began to argue, maybe, just maybe, debt wasn't dangerous at all. Today, our prosperity floats on a vast ocean of credit, mortgages, student loans, national deficits. We call it wealth, but it's still debt. The illusion is complete because as long as the system expands, no one asks what happens when it stops. In 1694, Britain created a new kind of power, not a weapon, not a fleet, but a bank. The Bank of England was built to fund war, yet it became the backbone of the modern financial system. For the first time, a government could borrow endlessly because it had a machine that could print trust. Empires were once measured by armies and colonies, but in the 18th century, Britain discovered a hidden weapon: its credit rating. While rivals bled gold, Britain borrowed cheaply, confidently, endlessly. Debt became its engine, invisible but unstoppable. When the United States was born, it inherited more than independence, it inherited debt. Alexander Hamilton, the first Treasury Secretary, argued that debt was not a curse but a glue, binding states together through shared obligation. A nation's promise to pay became the foundation of its unity. By the 19th century, the world found a simple way to control the illusion: the gold standard. Every note promised gold, every loan had a limit. For a time, faith and metal were the same thing until war broke the balance. World War I shattered that promise. Nations spent beyond their means, printing, borrowing, fighting. The gold standard collapsed under the weight of blood and debt. The illusion cracked, but it didn't die. It evolved. When the markets fell in 1929, the illusion of endless wealth turned to dust. Banks collapsed, unemployment soared, and debt became a weapon of despair. For the first time, people realized that when faith in debt fails, society itself trembles. In 1944, the world tried again. At Bretton Woods, leaders built a new order with the US dollar at its center. Gold backed the dollar, and the dollar backed the world. It was a promise. This time, debt would be controlled. Then came 1971. President Richard Nixon closed the gold window, ending the link between money and metal. From that day, money became pure abstraction, a symbol without anchor. Debt was now infinite, because it was backed only by belief. With the gold standard gone, governments found a new freedom. They could borrow, print, and spend without limit, as long as inflation stayed tame. Central banks became gods of stability, managing an economy built on controlled illusion. By the late 20th century, the global economy was powered by one idea: debt wasn't a burden, it was fuel. From credit cards to national deficits, the machine had learned to feed on itself. And every illusion needs growth, or collapse. By the 1980s, finance stopped being a tool, it became the product. Corporations realized they could manufacture wealth, not through innovation or production, but through financial design. Debt was no longer a weakness, it was leverage, power, and control. In the hands of Michael Milken, debt became a weapon. Junk bonds, high-risk, high-reward instruments, allowed corporations to borrow billions to buy others. For the first time, debt wasn't just financing, it was conquest. With borrowed money, aggressive investors began hostile takeovers, stripping assets, firing workers, selling divisions. Debt fueled destruction disguised as efficiency. Shareholders cheered. The illusion deepened. In the 1990s, capitalism changed its religion. The new god was the shareholder. Companies existed not to serve customers or workers, but to maximize stock price at any cost. Debt became the temple offering. Debt-driven restructuring looked efficient. Fewer workers, higher profits, faster growth. But beneath the surface, the foundations were hollowing out. The illusion was spreading from Wall Street to Main Street. As capital flowed freely across borders, debt became the universal language of growth. Corporations borrowed in dollars, yen, and euros, expanding faster than ever before. The machine was now global, and every nation was plugged in. The early 2000s brought a new illusion, the internet boom. Companies with no profit borrowed millions on the promise of clicks and dreams. Debt and speculation danced together until the music stopped. Then came the most powerful illusion of all, the stock buyback. Corporations discovered they could borrow money to buy their own shares, artificially inflating stock prices. Debt was no longer a tool to grow, it became a mirror reflecting false wealth. The more companies borrowed, the higher stocks climbed. The higher stocks climbed, the more executives borrowed again. It became a feedback loop of self-created value, a machine feeding on belief. In just a few decades, debt had transformed from danger to necessity. Corporations no longer feared it, they depended on it. And in that dependence, the modern economy became something new, a mirage of numbers, endlessly. In the 21st century, money stopped belonging to nations. Capital could move at the speed of light from Wall Street to Shanghai, from London to Dubai. Debt became the world's most traded product, and everyone wanted it. China's rise was powered by borrowing on an epic scale. Local governments built cities, factories, and highways with mountains of debt. It worked until growth slowed and the bills came due. In the United States, debt became identity. Homes, cars, education, all financed on credit. The American dream was no longer earned, it was borrowed. When Europe united under one currency, it forgot one thing: shared money means shared debt. From Greece to Italy, nations borrowed beyond capacity, betting that solidarity would save them. The illusion of unity nearly collapsed in 2010. In the developing world, debt promised modernization. Roads, ports, and power plants rose, financed by foreign loans. But when the dollar strengthens, repayment becomes impossible. Debt builds nations, then binds them. For decades, the IMF played global doctor, prescribing austerity for debt addiction. Cut spending, raise taxes, stabilize. But the cure often killed the patient, locking nations in cycles of poverty and dependency. Central banks were meant to prevent crisis. Now, they are the crisis managers, printing trillions to stabilize markets. Each bailout creates a new illusion that money can solve anything, as long as it's borrowed. The world's debt has surpassed $300 trillion. Every dollar borrowed demands another to repay it. It's a pyramid without a base, sustained only by trust that tomorrow will be bigger than today. Our economies are interwoven like never before. A default in one nation triggers tremors across continents. Debt connects us but also makes us fragile. The illusion is global, and no one stands outside it. For now, the system hums. Markets rise, banks lend, governments promise. But behind the calm, the illusion stretches thin. And every illusion, no matter how grand, must one day confront reality. For decades, the illusion seemed flawless. Debt created growth, and growth justified debt. But every illusion leaves shadows: inequality, stagnation, and fear. And those shadows began to surface. In 2008, the illusion met reality. Trillions in mortgage-backed debt, rated safe, sold globally, turned worthless overnight. When the fantasy ended, the entire system trembled. Debt hadn't created wealth, it had simply inflated it. To save the system, central banks created a new illusion: quantitative easing. They printed money, bought debt, and called it recovery. Markets stabilized, but the foundation stayed rotten. We replaced one illusion with another. The recovery lifted markets, not people. The top 1% saw record wealth, while wages stagnated. Debt-driven prosperity had become a machine that served only its creators. When illusions collapse, people seek blame. From Brexit to populist revolts, anger grew against the invisible architects of debt. Finance had become not just economic power but political fault line. After 2008, companies learned the lesson, but not the right one. They borrowed more than ever, not for growth, but to buy back stock. Today's markets rest on record corporate debt, another illusion waiting to burst. Governments, too, joined the illusion. To maintain calm, they borrowed endlessly, funding welfare, wars, and hope. Now even nations face what individuals once did. The math no longer adds up. Then came 2020. To keep economies alive during lockdowns, governments printed more money in a single year than in the previous century. Debt became life support, and addiction deepened. For years, they said inflation was dead. But every illusion has a price. As money flooded the world, prices rose quietly at first, then sharply. The real world was reminding us, debt isn't free. Now the cracks widen. Interest rates rise, defaults mount, trust erodes. The illusion that debt equals wealth is unraveling, yet the system cannot exist without it. We built prosperity on a promise we never intended to keep. After centuries of borrowing, printing, and believing, humanity must ask itself, can wealth truly exist without debt? Or has our prosperity become inseparable from obligation? From Mesopotamia to modern America, every civilization that mistook debt for wealth faced consequences. Empires rise, flourish, and crumble, yet each left behind a lesson. Illusion can drive growth, but only truth sustains it. Central banks are now the stewards of illusion. With rates, bonds, and quantitative easing, they control the narrative of wealth. Yet even they face limits. Trust is fragile, and public confidence can vanish overnight. Corporations have thrived on borrowed time. Executives face a choice: continue the illusion or rebuild real value. Invest in innovation, workers, and sustainability, or risk collapse when the next shock arrives. On Main Street, people must confront the personal illusion. Mortgages, student loans, credit cards, they fund lifestyles while building financial fragility. Education on debt, savings, and investment becomes not just necessary, but urgent. Blockchain, digital currencies, and decentralized finance promise transparency. Could technology separate wealth from debt? Or will it simply create a new illusion, dressed in code instead of paper? The world is a web of obligations. One nation's collapse can trigger a chain reaction across continents. Global cooperation, transparency, and accountability may be the only way to sustain prosperity. Debt is more than numbers. It is trust, morality, and promise. The illusion works because people believe it does. Ethics, honesty, and fairness must guide financial systems, or the next collapse will be deeper and more personal. Policymakers, corporations, and citizens all face choices: reform, innovate, and regulate, or continue chasing phantom wealth. The next decades will test whether humanity can coexist with its own financial illusions. The story of debt and wealth is the story of civilization itself. Debt can fuel prosperity, but only when grounded in reality. The great financial illusion is ending, and the future depends on whether we learn to build wealth without being enslaved by its shadow.